welcome back to another episode of Market Grinders. Today, what I want to do, I want to kind of walk you guys through a option trade that I got into Friday, and we can kind of watch this thing through the week. But what I want to do is kind of show you guys the thought process and why I chose this particular option and how to do the trade, so that as you guys get more and more comfortable with the market, I want you guys to really understand how an option trade works. So what the name of the company that I made the investment in was Mara, M-A-R-A. A lot of you guys may have heard of it. It's a Bitcoin mining company. The reason behind this particular company, from an option standpoint, it's a good way to, play the Bitcoin momentum right now. Any of you guys that are really active in the market right now, crypto, the overall market is on a run, but crypto in general is, starting to kind of take off. Bitcoin is kind of, holding ground at around 61. I think we ran up as high as 67. So as Bitcoin continues to increase in value or maintain stability in value, companies that mine Bitcoin, it's a direct relationship. So as Bitcoin goes up, and these companies get more and more Bitcoin, their price will go up as well. So what I want to do is I want to just break down Mara from a standpoint of, I'll show you guys the actual stock, show you the option. I want you to understand the relationship between how the stock moves in relationship to how the option moves, so you can understand how you truly get a higher, more leverage by investing in options. And you can understand, like, you pay a little less money when it comes to investing in options. So now we'll go to the Mara chart, and I'll explain this option to you guys. Okay, this is Marathon Digital. This is the actual stock chart that we're looking at, and this is actually on Robinhood. So you can see the current price is 51.83, highlighted in blue. Like I said, I did purchase this option already. It shows here I got the Mara $50. I can go blue on that. No, it won't let me go. So I have this Mara $50 call option, which what that means is, and then you look down here before we get into that, at the expiration is 2/18/2022, and I have two buys, meaning I bought two call options. So what this means is I'm expecting Mara to go up to $50 or higher. I'm expecting that to happen by February 18th, 2022. So I got until, and I mean, that's not too far away, but it's still going into next year. And I bought two call options. You can see right now, of course, I'm expecting to go to 50. I'm already at 51. So of course I'm in the profit. So you look here, this shows that this particular option now is worth $2,646. Right now I'm up about 9% on this call option. $236 is my current profit, and I bought it Friday. This isn't the option chain. This is just me showing you the company. And I bought it, I'll say probably around 950, I think, is when I bought it. And you see at 950 it was at 50.85. So now you may ask the question, how can you expect it to go to 50 and it was already 50.85? It was already above 50 when you bought it. And that's the thing about options. You can buy at the price of the underlying stock, it just costs you a little more money. And I'll explain that when I get into the options chain. So if I was buying the stock, I would have paid $50.85 per share to own the stock. But I purchased the option, and the option I only had to pay, I think it's around $12.45 per share, which is a huge difference than paying 50, but I had to buy 100 of them. So at $12.45 times 100, that puts me at $1,200 is what, roughly $1,200 is what I had to pay for one call option. And you can see here, show you guys, I purchased two, buy two. So I purchased two. So my total investment was around $2,400. And as you can see now, my total return is $2,600, which gives me about a $200 profit. So all you guys who are looking to make, extra $200 a day, strategies like this can net you an extra $200 a day every day. Just finding the right stock, purchasing the option, riding it up $200, and then sell it. I haven't sold yet. This just shows current where we are right now. Total returns for the day. It's only been one day that I held this option, and like I said, I bought it Friday. Markets are closed on Saturday and Sunday, so Monday we'll pick back up. And Monday, either we're at 51.83 now, so Monday is either gonna go up or gonna go down. And I'm hoping that it goes up. So as it continues to go up, my profit will continue to go up right along with it. All right, so let's go to review order. Actually, let's go to the portfolio. So over here, I'm going to click on my actual Mara $50 call, $2,600. Expiration February 18th, 2 buys. I'm going to open it up. So now this is the actual option contract, and options are sold in contract. So we saw on the last screen, we were $51 was the actual price. So now this is $13. So $13 represents the price, the current price of the Mara contracts, option contracts that I purchased. So, and you can see, I think I purchased around this time where I got in, around $12.60 is where I got in. And actually here was probably the highest point at 12 p.m. on Friday. We were these options were selling for $13.48, and I could have chose to sell then and cashed out a little higher than $2,600. But I'm holding it a little longer, and then you saw during the day it dropped down into the $12 range, and then it pulled back up at the end of the day around $13.23. So I made about 30 cents more on every contract, every share that I own. I'd have made about 30 cents more if I'd have sold it around 1 o'clock. But I can hold this thing up until February 2022. So just to give some clarity on what that means, that means February 18th, 2022, this contract these two contracts that I purchased, they expire. So whatever price my option is at is going to be the price that I'll cash out at automatically. The system is going to automatically sell. But I can choose to cash out or sell anytime I want to and take profits or take a loss if Monday it tanks and goes in the opposite direction, and I decide to get out of the trade at a small loss. I can do that. So just to explain more in detail about what a options contract is I don't at $13, $13.23. I don't actually own the shares of Mara, which is actually $51. I don't actually own those shares. I own a contract that gives me the right to buy those shares up until February 18th, 2022. So I can choose to either buy those shares and then take ownership of those shares, but at that point, I will have to purchase it at $50 per share. And right now, I have two options contracts, which gives me control of 200 share of Mara stock at $50. So I would have to come up with enough money to purchase 200 share of Mara at $50 a share, which is, I think, I don't know, 10,000. 50 times, 10,000 is what I would have to come up to buy those, or I can just control them with this $1,200 that I purchased them for. At the end of the contract, or prior to the end of the contract, I can choose to actually sell this contract to someone else. So I purchased these contracts at $12. I can actually choose to, if we come down here, so $12.05 is what I purchased the contracts for on October 29th is when I purchased them. So it cost me a total of $2,410. So currently these contracts are selling for $1,323, which puts the total value of these contracts at $2,600. So I can choose to just sell these contracts to someone else who may want to, what we call, exercise the right to own the shares. And they may not. They may want to sell these contracts to someone else. So just to break down the Greeks. So if you look in this area right here, we got the Greeks. I have other videos where we break this down as well. But two things that we need to look at when we're buying option contracts. For one, you got Delta, Gamma, Theta, Vega, and Rho. So the two biggest things that you want to look at, especially when you buy option contracts that have a long expiry date on it. And what I mean by long expiry, I'll say 3 months or more. This is about a 5 month contract. So you first of all, you want to know your delta, right? And delta moves. All of these numbers, if you do the math on it, all of these numbers will add up to 100. They have to add up to 100. That doesn't change. That's just part of the contracts. So 0.64 is each time the stock moves $1, my option contract price will move up 64 cents. If you look at theta is time decay. You want to be aware of that as well. So theta, you see this is actually a negative number. So theta is every day I'm losing 5 cents, 0.05 on my off of my delta. So and then you got Vega, Rho, Gamma. So these most of these deal with volatility. So if it gets a quick run up, delta may go from 0.64 to 0.84. Theta may come down and go to, all of these numbers will have to come down and adjust so that this number can go up. But if the option just stay flat or the stock stay flat, and what I mean by flat is, as you can see here, this is a upward trend, right? From 9 a.m. to 12:10 a.m. Actually from 9 a.m. to 10:30 a.m. we were in a downward trend. The stock went down. And then from 10:35 to roughly 11 o'clock, I would call this flat, meaning that it didn't have had a small spike, but it didn't have a huge spike. And then from 11 up to 12:10, I would call this a upward trend. And then from 12:10, I would say we're in a downward trend, as you can see here. but from 1210 to about 140, we're in a sideways trend. So and we've only had this contract for a day, but as we hold it for weeks, these trends are going to be longer, right? So this is just a 12 to trend, so that's an hour trend. But if I held it for a week, we can look at a day trend, we can look at a weekly trend, we can look at a monthly trend. So if our stock stayed going sideways, meaning that it stayed the same price for a long period of time, theta is going to start eating away at our profit. It's going to start, pulling. This number is going to go higher and higher. That this let me highlight in blue. Actually, this number is going to go higher and higher. Your theta. This number is going to go lower and lower. Your delta. So the lower this number goes, the smaller amount of profit you start making as the stock makes these dollar moves up. And of course, if the stock starts to go down, this number is going to go down and this number is going to go up, and your profits are going to start to plummet. So that's why it's good to, when you're investing in options, especially short term, if you're looking to get in and out, in a day or something, you got to pay attention to it. You got to pay attention to it, because if the stock drops, you want to at least be there to get out and save some profit. And you just got to stay on top of it, because it happens fast. So, but when you purchase long term, not so much. So, like, again, I'm expecting Bitcoin to continue to run for at least a month or so. So this company should run right along with it. And another good thing about this company, I think they have earnings coming up this month in November. So earnings, if in the last quarter they have mined a significant amount of Bitcoin, and say they mined it in the $28, $27, $20, $30 price range, that would be the price of Bitcoin, and they got 10 or 20 or 40 of them from their mining process, and now those 10, 20, or 40 are $61 each. That will show on their balance sheet, so that it will show that company is more profitable. So once the company is more profitable, most of the times the stock will rise in price. So that's another thing that I'm banking on. And I say most of the times, they could have made more investment this quarter as well and bought more equipment. So the company may not have been as profitable because they spent money to make money, but that would tell me, all right, maybe I want to try this option. Maybe I want to get out of this option well before February, and then wait about 3 months and jump back in, because in 3 months, with the mining of Bitcoin, maybe they'll be in a better position. And since they made an investment last quarter, this quarter they won't, that investment won't pull from their profits, so they'll make higher profits. So just some things that I think about, when I'm investing in options. So now let's take a look at this is called the options chain. So this green line right here, and this is Robinhood, by the way, that I'm on. So if you're using TD Ameritrade or E-Trade, they have the same thing. It may look a little different, but it's the same concept. So these option chains, this is how your option contracts are I guess developed, right? So you don't actually have the ability to determine and negotiate your options contract, but you can choose certain things within the contract. So for instance, again, if you look up at top, this is Mara. It shows that the stock is 51.83. That's up 3.7%. And this is data from Friday, being that the markets are closed on the weekends. It gives a ticker symbol, MARA, and this is a call buy. So you have calls and you have puts, right? And you can, as you see here, I can buy or sell a call or a put. And what we're doing, we're buying a call. The green highlight for buy and the green highlight for call. So if you look over here in this area with the drop down, these are your expirations. So these are the things that you have the option to choose. So we chose, and if to Monday, you guys want to jump in this option play, feel free to. I'm kind of walking you through how to jump into play. Not your financial advisor. I'm not telling you to put your money in this. My money is in it. I'm not telling you to, but if you choose to, this is how you do it. But also understand it does take it. There's risk in it, right? You could lose your money on this play, or you could make money on this play. So we're looking at February 18th. That was the expiry date that I chose for my contract Friday. So now it takes us to my option chain. It says expiration February 18th, and these are all of the different positions that I could take, right? So let's start at the bottom. So the bottom says the current stock price is $51.83. It says that I need to be at $25 in order to be profitable. As you can tell, we're way above $25 right now. But if you look at the price is $28. So I would have to pay $28 per share to get into this particular options trade. So what happens here is I pay, it'll be $2,800 for one contract. So being that I paid $2,800 for one contract, it's just like buying anything else. I gave somebody, if it's a business transaction, if I'm buying a t-shirt and I want to make a profit on a t-shirt and I pay $5 for the t-shirt, I have to sell that t-shirt for at least $5 in order to break even. Now, everything that I sell above $5 is profit. So same thing in buying an options contract. It's a $25 strike price, and that's what this area is referred to, strike price. My break even is 53. You see this column, it says break even is 53.60. So what that would be is this $25 plus $28.60 would be a total of $53. So I would have to make back the $28 in order just to break even. So that means the stock price would have to move $28 in order for me to get my money back. And so I wouldn't purchase this. This is called in the money, deep in the money, right? And some people would purchase this for whatever reason. I wouldn't. And as we go up, you can see this is 28, this one's 24, this one's 22, this one's 21, this one's also 2105. That was 2188. This is 2105. The next one's 20. The next one's 19. The next one's 18. And as we go up, the strike prices are getting higher and higher, right? So meaning that I have further to go in order to get to a break even. Until I get to the current price is $51. This is 50, and that's where I bought mine at Friday. Still in the money because I'm underneath the price of the stock. So that's a good term for you guys to I guess lock in what in the money means. In the money means that you're below the stock price. So and I'm fine being below the stock price. I got it at $12. And when we say $63 is my break even, as you can tell, we're only at $51 and I'm already making profit. So break even is kind of sort of just a area or a range. A lot of things happen in an options contract, but the further down you purchase, the higher the price is going to be, but the higher the stock, the option or the stock needs to go in order for you to get your money back. So, and if you look here at $55, the stock has not reached, and when I say $55, I'm talking strike price. the stock has not reached $55 yet. So this option is cheaper. This option is $11.38. But I need to make my $11.38 back, and before I'm breaking even. And then the further out we go, the cheaper the options get, right? So this one's $80, right? That means I need to go from 51 to 80, but they only charge me $5 and 60 cents for this. But this is $30. It's about a $30 move that the stock needs to make in order for me, to get to my break even point. So just some things to like internalize and think about when you choose to purchase your options. I always kind of purchase right at the money, because you become more profitable quicker, right? I don't mind paying a little bit more. I don't want to be ridiculous and pay $28. That's almost half the price of the stock, and you lose your leverage there. And I mean, you can make money here, but you're gonna make a lot less. But you're gonna make money quicker. You'll get to profitability quicker, but it's only gonna be a couple dollars. Here, when I purchase right below the money, it's in the money, but you would call this area at the money, as well as you would call this area at the money. And then once you start getting out, you would call these areas out of the money. And the further you go out of the money, the cheaper the contracts get, but the higher the strike prices go. So this right here is time. It's gonna take me time to get here. I could be lucky and get a huge spike in the stock, go to $80 tomorrow. But luck is not a strategy, right? So when you're investing in options, regular stocks or whatever, luck is not a strategy. Sometimes it happens, but that should not be your thought process. I'm going to get lucky and it's going to shoot up here, and I'm going to pay $5 a share for it. Meaning I would get the same contract that I bought for $1,200. You can get it for $500 here. You getting two of them for about $1,100. But the probability is riskier that it's going to hit that 80, in a timely order, because you still got theta, time decay, working against you. The stock could go up to $70 and you still not be profitable because of how long it took to get here. So I normally purchase mine. As you can see, I'm showing here, I have these two contracts for $50, and they're currently worth $13, and that puts me up about $200 right now. So I normally purchase in the money because I become profitable a lot faster. I make less money, if I purchase outside of the money, like I pay less. So this option right here, if I would have bought it out of the money, it would be worth a little more than $13 right now. We may be at $14, which my profit could be about $3. But we haven't really got here yet though. It's 55. We're still at 51. But right now, by the time if we hit 55 this week, and we'll check back in. I'll check back in probably Friday with you guys and let you know where we are. But this right here could probably be $20. So now you're looking at and I have two contracts. So you're looking at one contract being worth $20. Everything is done in a multiple of 100. So being that it's worth $20, that would be $2,000 for this one contract, and I have two of them, so that'll be $4,000. So the $2,600 that you're looking at now could easily be $4,000 if we hit the $55 mark this week. So it is the stock market is always moving, it's always going up, it's always going down. So at some point in the week, I may be down on this and down on this trade, and I have to make a decision. Do I want to stay in this trade and hold it longer because it's going to turn around and eventually go up, or do I want to cut my losses and just take my profits now and not lose my money? But those are just some of the decisions that have to be made when it comes to trading options. And I'll tell you what I normally do, especially with some of the larger options. I have a percent gain that I'm looking for, right? So right now, being that this particular option Friday, it actually went up 13%. if this was a larger call option and I had $10,000 or $20,000 invested in it, I would have took a 13% return in one day. I'll take that all day. So that's $1,300 that you made in one day. You had to put 10,000 out to get it, but still, that's $1,300 that you made in one day. You get your 10,000 back plus 1,300. Most people don't make. A lot of people trade and make well over 1,300 in a day. But if you're doing this in your part time and you have a job or something like that, like a lot of people on their job don't make $1,300 a day. 1,300 a week, may be a stretch, for some jobs. But so just things to think about. Like, don't be greedy. Take your profit, and go on to the next trade. But also have a strategy. Like I said, this particular trade, I'm banking on Bitcoin, riding high the entire November based on the research I've done on Bitcoin. So as Bitcoin rides, I'm looking for Mara to ride right along with it. So that's just a brief overview of a options contract. I hope this was helpful. So if it was, give me some comments in the comment section. And if it wasn't, still give me some comments. Let me know how I could have made it, a little more interactive and a little more helpful. And if you guys need more explanation around options and options trading, just let me know. Leave me some comments, and I'll be more than happy, to make a video for you guys to kind of show you a better way to leverage your money and make more money in the market. So won't hold you guys any longer. I look forward to your comments. I hope you guys try it, man. Get in and buy a contract if you have the money. But also always realize that always play with money that you can afford to lose. So don't take the rent money and jump into options. Don't take the light bill money and jump into options, because options they're great tools to leverage your money. They're great tools to make income with, but they are extremely risky, and it takes a lot of practice to kind of master the options game. And you're still going to lose, right? You're not going to win every one of them, but at the end of the month, you want to look at your track record and see how much you made or lost by the end of the month. And then you also want to look at your trading strategy, each month to see, okay, or each trade actually. If you get in a trade and you lose money, understand why. Like, what happened? What caused me to lose money? What didn't I do right? And a lot of times, what causes people to lose money in options trade or a stock trade is, for one, greed, trying to milk it for too much and it turns around on you. Two, being cheap. I want to choose the $5 call because it's cheaper, but it has to go up to 80 for us to make profit. And three, time, right? If I'm looking to, and I'm looking to get out of this trade by November. By the end of November, I'm looking to be out of this trade. But I bought out till February. So before we end, let me show you guys something, right? So even as we look at our time, all of that contributes to the price that we pay. So I have it out to February, and I'm saying I'm looking to get out of the trade in November. So let's move it up to, I say, November 26th. November 26th, that same trade that I paid $1,300 for, it only cost $6. I could have purchased it for $6 if I put my expiration out to November. And that's fine to do, but I'm the type of investor that I try to mitigate loss. I don't look at, how much can I make? I'm thinking about how much can I lose? I can lose $1,200 on this trade. Actually, $2,400, on this trade. I don't want to lose $2,400. So what I do, I would rather, and actually on this particular trade, if I would have bought it at $6 and had a shorter expiration, and I bought two of them, that would be $600 a piece, which would really truly be $1,200 for the two contracts. But that's $1,200 that I could lose. So if if something happened in February that caused Bitcoin to drop, that caused Mara to drop, I don't have any time to recover, right? So, I mean, February 25th is going to be here before you know it, because you got to actually take out your weekends. And actually, we got Thanksgiving also, so we're not trading during holidays. So you have less trading days. So if things start to go in the opposite direction, I have less time to make an adjustment, right? So in November 7th, November, Mara went down to $49. It's currently at $51. You see it here, and you see it here. It's currently at $51, but if it went to $49, my option contracts will be worth less. Not worthless, but worth less money than they are now. I wouldn't be losing, but I have to make a decision. I need to go ahead and take profit, because what if it continues to fall down? I don't have enough time to get out of the trade. So I choose to pay a little bit more and just buy, because you're actually buying time, right? And buy time out to February. I paid more for it, but man, I got to February on these options. And I could actually, you don't have to sell both of them. I could sell one in November, or if I get a spike, I can sell one, take profits for and break even on every dollar I put in it, and the other one I can just hold it out to February and just let it ride if it gets in that kind of a pattern where the price continues to go up. So just some tips and tricks when it comes to trading options. But options are a great way to make extra income, and a great way to invest. It's just not about getting in and out real quick. You can buy. Let me show you guys here. I can move the expiration all the way out to January 19th, 2024. Now the price goes up. So now you're looking at this same contract with a $50 strike price is going to cost me $29. So it'll be $2,900. But I got it till 2024. And a lot of people, they trade like that. They purchase, $5,000 in option contracts and just hold them for a year, hold them for 2 years. And as that stock go up for, 2 years, you could turn at the end of 2 years, your $5,000 could easily be $40,000 if the play goes your way, or more if the play goes your way. But that's not the strategy that I'm utilizing on this particular trade. This is just a quick income trade for me. And like I said, my goal is to get out in November. But if November doesn't give me the amount of profit that I want, I can hold it all the way down to February, which I definitely want to hold it till February. By January I'll be getting out. Even if it's sky high, it's time to ring the cash register and take profit on it. But so thank you guys. This video has been about 35 minutes. So I hope you guys have watched it all the way through, and if you have, I hope you learned something. So again, just give me some comments, give me some feedback. Make sure you are subscribing to the channel and you have your notification bells on. So when I do a video, you get notified as soon as I do it, because this is time sensitive, right? So if you're watching this video after November the 1st, all of this data is going to change. All of these numbers will change tomorrow. So if you're watching later, do your research. Take a look at MARA and see if it's a good time. Bitcoin could have plummeted by then, or Bitcoin could be sky high by then, and the options are a little too high for you guys to get in. But just make sure you do your own research, right? I want to point you in the right direction. But the biggest thing about investing in the stock market is investing in yourself, and investing in learning this stuff, investing in doing your own research, and not relying on somebody telling you, what to buy or what to sell, because people can easily lead you in the wrong direction. So again, sorry, won't hold you guys up any longer, but until next video, I wish you guys much success and keep grinding.